This is the Daily Market Comment for Wednesday, March 9th by Rafi Boyajian. I'm Christina Marujos and thank you for joining us here at XM.com. Riskier assets were back in fashion on Wednesday, while safe havens were largely on the retreat, as risk-on was attempting another comeback after yesterday's bid fell flat. Reports that Russian troops in Ukraine have failed to gain significant new ground in recent days could be seen as a positive development. But perhaps a more likely explanation is that investors have already priced in the worst-case scenario for the Ukraine crisis, and as equity prices reach the bottom, debt buyers are stepping in. The S&P 500 ended lower for the fourth straight day on Tuesday, reversing earlier gains. However, Wall Street futures have perked up today, firming by more than 1% in European trade, as stocks in Paris and Frankfurt jumped by about 4% soon after the open. But it's doubtful at this point if this can be the start of a sustainable revival in risk appetite, and much of it will depend on whether commodity prices will continue their upsurge and what the outcome is of the major political and central banks events that are coming up over the next week. The Ukrainian and Russian foreign ministers are set to hold talks in Turkey on Thursday. More importantly, investors will find out over the next 7 days what the response of the world's two biggest central banks will be to the fallout of the war in Ukraine. The European Central Bank meets tomorrow, and there's a strong chance policymakers will try to cushion the Eurozone economy from the crisis. The Fed, on the other hand, will probably only modestly tone down its hawkish rhetoric next week. In the meantime, however, the euro is benefiting from the global pause in the flight to safety, reclaiming the $109 level. The US dollar is on a broad pullback, along with the Swiss franc, yen, and gold. But the Russian ruble extended its slide, plunging by over 7% as more and more Western businesses halt their operations in Russia in protest of its invasion of Ukraine. Fresh sanctions by the US and UK also contributed to the ruble's pain after the two countries banned the import of oil and gas from Russia, while the European Union announced its decision to cut its reliance on Russian gas by 2/3 by year-end. Nevertheless, the oil rally was taking a breather today, with prices dipping as the risk tone improved. This was the Daily Market Comment. Thank you for watching at XM.com.